Okay, today we're going to be doing three stocks I am not bullish on at all anymore. And the first one we're going to be doing is Nike. And Nike is we're going to do the analysis on the monthly chart, all of them anyways, just to show you what's going on in the high time frame. So this is the Gann square I have pulled up from the early days back here in like 1984. And essentially, it's following market symmetry very well. And one thing, without using any other indicator, what's standing out right now? Well, it lost a long-term support level of this blue angle, right? This is very important for price to maintain above. And you can see back here in 2015, it was resistance. And then back here in 2018, it finally flipped to support once, twice, and then continued higher, right? And essentially, this orange level should have been support, right? After it battled it a little bit, it came back down just a little bit and got back above. Tried to hold the orange level for a long time, but the resistance of the arc got in the way right here, this blue arc. And you can see that giant wick above. It failed. It was a failed attempt. That was the sign to get out. This huge bearish looking candle, and then things just collapsed. And sure enough, got a 20% down weekly candle right there below another level. The most important one is this angle right here, and that's where price is below. So what this ultimately means is the path for Nike is probably going to be something like this. Like this is a range right here before it broke out, right? So it'll probably go back down. See this range down here, maybe down a little bit more, like right here, maybe into the mid 60s or so, and then maybe go finally work its way back up to the 80s, right? To retest this resistance. This will probably happen. But then ultimately, I see this angle getting hit in the 50s, like maybe 55, 54, and then probably bouncing. And then if that won't hold, it can go lower. But that's the short-term target right there, the mid 50s for Nike. And if you add the confluence of the Ichimoku on here, we can see how bearish the monthly Ichimoku looks. Like the candles, or sorry, the cloud just turned red a while ago, back in February, and now its price is below everything, the conversion, the baseline, and it's continuing to go lower. So since it's quite extended from the conversion and baseline, I do believe there will be a retracement back to this resistance level, right? And this resistance level also matches this area right here, right? See right here, that candle, the bottom of that candle right there. If you look, if you get a retrace back here, you can see that that would hit that candle, which would be maybe in January of 2025. So this is a slow payment, slow process. So it's not going to go straight down to this level immediately, just because there's lots of support in this area over here, right? And especially the top of that candle up there. So yeah, this chart is officially bearish. I would not really want to be looking for opportunities to buy. But if you do look for opportunities to buy, it could be in the 60s just to hope it goes back up to 80s and then take some profits and then maybe short it to go all the way down to the 50s, right? So this chart does not look good at all anymore. I would not want to be long Nike. This level right here is going to be resistance in the 82s, 83s, something there in the future, which along the arc lines up here around like January to February of 2025. So there could be some time to get back there. But yeah, this chart looks ugly now for a continuation lower. And the next chart that I do not like is Disney. And this one I have again pulled up since the 1968 on the monthly chart. And as you can see, it still has followed market symmetry perfectly with this blue angle here. And then it went back to the red, then up here to the green level, back to the blue level, lost it, lost the arcs, lost the 45, lost everything. And what do we really see price holding? It's not the same as Nike, where this blue angle is actually holding that support, right? You can see it was resistance here, but now it flipped it to support. So it's not as bearish as Nike. But when you add on the Ichimoku here, you can clearly see that the monthly chart just closed the candle below both the baseline and the conversion line. and that is not a good look for a continuation higher. So the most likely outcome now is probably this 100 level, 101, 102, 103. That's going to be resistance. So if it comes there, could be a good short opportunity for it to roll over to at least retest this blue angle again. Since it held the first time, it could hold again, right? Because it was resistance here. Now it's support, could be support again. So to think it's going to go back to the orange level here, that would be maybe a little too greedy, although it's never really retested it ever in history, right? Because this is the orange level, and it tested the blue level a bit. It went straight up to the green level, but it hasn't tested this orange level. So I think that would be my ultimate target. Like, I think it would be okay to be a little bit greedy if you did short it, just because even though if it bounces once again, it might come up and then slowly over time roll over to this orange level in the 60s, right? So it's at 97 now. My ultimate target for Disney is going to be like at least 68, right? But it's not going to go there in a straight line. Like the path for Disney, it'll probably come back up, maybe retest the 103 zone, right? Let me just do a little path here. Could come up and retest the 103 zone, then come back down, maybe test this zone right here again, right? And then come back up, and then maybe get rejected by this level here, and then finally maybe head down, retest the angle again, and then probably get some chop in that direction until price finally breaks lower and gets to that level, right? So it could be like a whole another year, year and a half out before any of that $68 price action happens. But this chart does not look good. It does not look bullish at all. It looks like it wants to retest at least $80, if not 68, right? So I would not want to be long this stock either. And anything over 100 bucks, I think it could be a good opportunity to try to short it. And even if it went up back up to the clouds, or to the cloud up here into like the teens, the 115, one whatever, that could be an even better time to short as well. But I don't think it'll get there, just for the fact that this candle close, this monthly candle close right here, was below the conversion and the baseline. So this is going to be some resistance, and this should push the stock down further, at least to the 90s, the low 90s, and if not, all the way down to the angle first. But yeah, like I said before, my ultimate target would be around 68 for it, but that could be at least a year of waiting for that price target to hit, since these are monthly candles. It could take a long time to play out. So yeah, I don't like this chart. And let's go continue to the last one, which is SBUX. And this is SBUX on the monthly chart from the bottom here in 1992. And we can see it is also pretty symmetrical over time. And we can see I only have 3 angles pulled up. I deleted some of the other ones, but even these angles down here were symmetrical too. But this is the 45, the most important one. And that last earnings report just crushed it right below the 45. And the one thing I really want to point out that makes me even more bearish on it is the SMA on this one. It started closing monthly candles below the 100. And when was the last time you saw a monthly candle close below the 100? We can go all the way back to probably here, 2009, right? That was the last time. The financial crisis was the last time SBUX closed below this. So this is a very bearish indicator that price might not even come back up to the 45 to get rejected, right? Because of this strong resistance of the 100-month moving average. So anytime it comes back up to maybe $80, maybe 81, 82, that could be a good short opportunity to come down to the $65 orange level right here. So let's zoom in a little bit. We can see the importance of that orange level right here. It even confirmed it as support here back in COVID, even wicked down to the 100 and the bottom of the arc right there. So the target really for SBUX is going to be retesting this orange level, maybe $65. And probably worst case, could even go back down and finally retest the 200-month moving average, which the last time that was tested was also during the financial crisis, right? So since it already broke the 100, price will travel to the path of least resistance, and that is currently down, right? So is it going to go down in a straight line? No, nothing does, right? So price could come back up to the 100, to the 80s, right? And then maybe finally go back down to the 60s and then go up and down, right? And then finally get down to the 200, which by that time, if it's like later next year, the 200-month moving average would probably be around $59, not 53, right? So this is basically going to be just trading down to sideways for many months. If is there a possibility for a price to come back up and test the 45, $87, $88? Yes, and if we add on the Ichimoku with that one, we can see it exactly matches that as well. So price could come up to test the bottom of the Ichimoku, bottom of the 45. If that ever happened, I think that'd be a phenomenal time to try to short this stock, because that'll definitely be a rejection from the multiple confluences of the baseline, the conversion line, the 45-degree angle, the cloud, and everything, right? But it's got to get above that 100-month moving average first to get up there. So there's going to be some challenges. So I'm not sure if it'll make it back up there, but if it does, I think that would be a great opportunity to short it, right? So yeah, all three of these charts, they have one thing in common, that they're stuck under massive resistance now, and they're going to travel to the path of least resistance, which is currently down. So uh, yeah, I would not want to be long these stocks anymore. I would only want to be looking for opportunities to short them, because price will most likely gravitate down to sideways for the months to come.